Hi, my name is Eric Hugon. Welcome to this video report analysis of NEWPARK Resources Incorporated. This report is made in affiliation with Bergen Road Reports, an equity research program administered through Tulane University's A.B. Freeman School of Business. The research team that covers NEWPARK Resources includes equity analysts Eric Hugon, Ryan Kern, Doug Prescott, and Constantine Zonos. Please take a look at the agenda for our presentation. This video will include an overview of NEWPARK Resources, a description of the company's recent developments, a breakdown of both revenues and revenue drivers, an explanation of both our forecasts of the company's financials and our valuation, and our team's overall investment thesis. NEWPARK Resources trades on the New York Stock Exchange under the ticker symbol NR. Operating in the oilfield services industry, NEWPARK specializes in supplying companies with drilling fluids and mats. NEWPARK divides itself into two segments: the Fluid Systems and Engineering segment and the Mats and Integrated Services segment. NEWPARK's biggest customers are exploration and production companies. However, NEWPARK has recently expanded into other industries, such as utilities, through its Mats and Integrated Services segment. NEWPARK operates in several regions, but certain key areas include North America, Europe, the Middle East, Africa, Latin America, and Asia Pacific. NEWPARK Resources headquarters is based out of the Woodlands, Texas, just north of Houston. As of November 11, 2015, NEWPARK Resources' current stock price is $5.69. The company currently has 84.15 million shares outstanding, giving it a market capitalization of $485.4 million. Over the last 5 years, NEWPARK sold for as low as $5.50 on October 2nd, 2015. It sold as high as $13.50 on October 18th, 2013. NEWPARK Resources has a few recent developments worth noting. The company has recently made preparations for its planned expansion into deep water projects. NEWPARK began a $30 million project in 2014 to upgrade its capabilities and expand its capacity in the deepwater Gulf of Mexico shore base. NEWPARK also launched Kronos, a group of fluid systems specifically designed for deepwater applications. The company was also recently awarded a contract in Uruguay for an ultra-deepwater drilling project that should begin to see revenues in early 2016. When breaking NEWPARK Resources' revenues down, we see that 58% of its revenues come from the U.S. market, while the other 42% comes from international customers. When looking at revenue generated by each region, we see that the U.S. makes up 58% of revenues. Europe, the Middle East, and Africa make up 24%. Canada makes up 8%. Latin America makes up 7%. And Asia makes up 3%. NEWPARK Resources generates most of its revenue from its Fluid Systems segment. 86% of total revenues came from drilling fluids segment last year, while 14% came from the Mats and Integrated Services segment. To forecast revenues for NEWPARK Resources, our team used a three-factor regression analysis that included property, plant, and equipment, goodwill, Europe's Brent spot oil price leading one period, and the U.S. horizontal rig count, according to Baker Hughes. After a thorough analysis of NEWPARK Resources, our team determined a 12-month target price of $7. To find this figure, we used a weighted average between two ratios that we deemed relevant to NEWPARK Resources industry: price to book value and price to cash flow per share. Our $7 target price of this security results in a market rating for NEWPARK. Our investment thesis for NEWPARK Resources involves several key factors for both NEWPARK as a company and the oilfield services industry as a whole. First of all, the decrease in the U.S. rig count and the appreciating U.S. dollar are major concerns. Over the past year or so, the Baker Hughes rotary rig count has dropped by 63%. This means that domestic customers, which are most important to NEWPARK, aren't drilling and don't need NEWPARK services right now. This is due to the huge decrease in oil prices over the last year. With the strengthening of the US dollar, NEWPARK is losing a lot of revenue through foreign currency exchange, as you can see in the table below, taken from NEWPARK's latest 10K statement. NEWPARK's low debt structure provides a competitive advantage moving forward when it comes to financing flexibility. With a total capital ratio of 22%, NEWPARK is in a lot better shape to negotiate low-interest loans than many of its peers. NEWPARK has also recently expanded its research and development efforts in an effort to expand into new markets, such as the utility industry. Finally, some industry trends effect on revenue drivers are uncertain. For example, increased activity from international customers, especially OPEC customers, could mean many things for NEWPARK. Increased activity could pay off for NEWPARK if it can become the supplier to those products hiking up activity, but that increased activity also means less production coming from its United States customers. Rig technology could also play a role in revenue. With the cost of operating a rig decreased due to the low price environment, exploration and production companies could afford to splurge on NEWPARK's value-added fluids in order to get the most of an oil well. All of these points in our thesis could play a role in the future for NEWPARK. Thank you for watching our team's analysis of NEWPARK Resources. Disclaimer: the Birkenroad reports are produced solely as an education program at Tulane University's A.B. Freeman School of Business. The reports are not investment decisions. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you.